Good afternoon, everybody. Today is Monday, the 27th of September, 2010. Let's take a look at this S&P 500. We've had a pretty volatile market here, obviously. Last Thursday, we had the market sell off right down to that support at 112 and didn't penetrate it. It looked like maybe the market was going to be in for a little bit further correction, at least time-wise. But then we had the Tepper rally on Friday, and today the market was a little bit spooked, I guess, by Prechter's comments that he saw the Dow going to 1,000. Now, there's obviously a big battle being fought in this area. That's, and it's a war of words and it's a war of money up here as well at this 113.20-ish area. So who's going to maintain, are the buyers going to be able to maintain control here, or are the sellers going to be able to push it back down? Well, so far, the burden of proof remains on the short sellers here. The market has broken, as we know, above the neckline of that inverted head and shoulders pattern on the weekly time frame. After undergoing, this pattern of lower highs and lower lows, the market has now transitioned to, we have this higher low and we have a higher high on the weekly time frame, which is also holding very nicely on a closing basis above that 200-day moving average. So a real hard-fought battle in this area. If we take a look at a 65-minute time frame, here's a little bit closer look at that level, the 113.20 level, and then just down below that, right at about 112. So those are the key levels of intermediate term support that I think we want to see hold this week. Getting back below this 113.20 again, that wouldn't, I think, be very good for the confidence of the buyers. I think we'd have to at least undergo some sideways correction through time, that is, and if the market were to break down further below 112, I think that would be a reason for bigger concern. So let's look at a 10-minute time frame. We can see we've got this level right in here kind of being tested this afternoon, and what right now we've got 113.80 basically. That's actually our first level of defense, I think. 113.80 had been a pretty hard fought area last week. Resistance turned into support, resistance again, and then we gapped up above it last week. So 113.70 down to 113.20 and then 112. On a daily time frame, you look at that, we've got the 50-day moving average down near 110.5 or so. So it seems as though really we have a battle being fought here, and we're maybe in for a little bit of volatility and perhaps time digestion of these gains. One area of reason for concern is the financials. They haven't really participated the way the rest of the market is. They haven't gotten up to the top end of the range, which is 115.10, 115.12, and the bottom end of the range, of course, at 113.50, where we had rallied from recently. What's really the reason for concern here, though, is or a little bit deeper concern on the financials, is they weren't unable to breach this 1460 level last week, and they're also below a declining 5-day moving average. So let's look at a 30-minute time frame to kind of frame that a little bit better. But last week we let go of that 1460 level, and the market was unable to recapture that. So the financials are a little bit heavier than the rest of the market in here. 1420 is a level we want to see hold. If the financials break the 1420 level, that's down here, then perhaps we're heading back to the bottom end of the range in the financials, and that's obviously not going to be good for the S&P 500. An area of a little bit of strength recently is the semiconductors, who got above that 50-day moving average and this prior support, which had turned into resistance at 27. So if we see the semiconductors break back below 27, 26.95, basically 26.90, back below 26.90 this week, then I think that we want to be a little bit defensive towards the semiconductors. And the Nasdaq has had this huge uninterrupted run here, so just looking at it, it's definitely extended, and you would think it's due for a pullback. So I think it's just prudent to keep some cash available, have some hedges if you're really worried about it, and keep raising your stops in some of these trends that have really run real far, real fast. The bigger, more important levels of support for the Nasdaq right now is down at about 48.30, and just above that we have these highs from where we gapped up last week. That's where the 5-day moving average is about $49.10. So we're still basically in uptrends. We're getting a little bit tired here, and we've got some key levels of support to watch below us. That's the way it looks for now.